Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. And today is our 150th episode! Woo! Insert sound effects here. What a amazing landmark to hit. Finally, we're on 150th episode. How exciting. I am, of course, as ever, here with Tom and Francis. Guys, how are you doing today? How do you feel on this momentous occasion?
I feel a lot better now that I've heard that intro. You bring in the energy. 150 feels like a big landmark. I'm loving it. I wasn't hyped before, but after that intro, I'm ready to go now. I'm excited for the conversations.
If there's one thing I can do, Tom, it's bring the vibe. I can do it.
I know.
But Francis, how are you doing today?
Let's go. I'm hyped. Let's go. It should be a fun episode today.
Amazing. It's really exciting, especially when you think about how far we've come for this podcast. I think it started, must have been like back in 2020, I think. So that's a long time to be doing podcasts. Obviously, I know we've all joined it at different times and done it in different ways, but yeah, how exciting. But anyway, 150. What are we going to be talking about today, guys? Tom, what are you bringing up?
Well, an exciting topic I've got today to sort of fit the occasion. I'm going to be talking about a little bit into the disconnect between firms and their customers on how customer data is used.
Wow, Tom, you know how to party.
I do indeed.
Amazing. And Francis, what are you talking about today?
Today, I'm going to be talking about false declines and the impact they're really having on customers as well.
Fantastic. And I'm going to be talking about digital banks and app downloads. So all very exciting things, all very momentous. It's news stories, of course. But I mean, does anyone want to go first? Francis, I feel like I pick on you quite a lot. Do you want to go first this week?
Absolutely. So, yeah, today my article is all about false declines, which are when you try to make a payment but your bank or processor decides that for some reason there was something just a little bit suspicious about it. And although it was completely legitimate, they end up saying, we're not going to process this for you. And as I'm sure you can imagine, as a customer, that is extremely frustrating. All you want to do is pay for something, but they just won't take your money. It's like, I'm literally giving it to you, but they just won't take it. And the reason I found this article so interesting was because ClearSale, the global risk tech solution provider who commissioned the report and did the research, found that up to $25,000 in revenue can be lost from a single customer due to a false decline, because a lot of customers, once they have that bad experience, aren't going to want to go back to that retailer again because at the end of the day, every single customer in the modern day wants the most seamless and easy payment experience possible. And if there's any hiccup, then it becomes extremely difficult from a retailer's point of view to ensure that customer can give you another chance and for you to make amends. Some key findings from the report include consumers are sensitive to fraud, with 83% of customers stating that they would not return to a retailer that failed to protect them from fraud, and that in 2022, 25% of respondents experienced false declines, with 36% encountering multiple instances. And I think what perhaps the biggest takeaway from the findings were for me is that across all age groups, consumers indicated a tendency to voice grievances on social media platforms, ranging from 22% of baby boomers to 41% of Gen Zers. And alarmingly, 65% of false declines were later validated as legitimate transactions, resulting in significant revenue loss. So the main thing I wanted to discuss with you guys is, have you ever experienced this before? And if you have, does it really come as much of a surprise that people are taking to the internet to voice their opinions and to show how frustrated they are with their retailers? Or is it, who really is the responsible one here, do you think? Tom, I'll go to you first.
I'm not sure if I'll be alone in this, but I was quite surprised by just the sort of article as a whole. I think when I think about me personally, if I have a false decline, it's generally just a case of, pop your card in again or try the transaction again online. And second time, maybe third time lucky, it will go through and it isn't really that much of a problem. It can be a bit like, that's a pain. But I can't say I don't remember having that kind of experience and I thought I'm never going back to this retailer again, because that seems a bit extreme to me. And the concept of people taking to social media to outcry about false declines. It feels a little bit extreme, I'm not going to lie, but I don't know. I think it's an interesting sort of report. The sort of total of $25,000 potentially being lost from one decline is hugely significant, and to me, I would never have thought that would be the case. So it is interesting to see how some people do take it a lot more seriously and are sort of disappointed by these. But equally, I think it's a difficult line to toe for businesses because they obviously need to ensure that on one hand they're giving customers this seamless experience, but they also need to take fraud and security really, really seriously. So if there is anything that comes up as a potential red flag for them, it makes sense for them to be a bit more cautious and decline the transaction. And I think that's just the area where I can't ever see true 100% seamlessness and lack of friction because fraud does exist, and what for as long as it does, it's a case that businesses have to take seriously, and we're always going to have little bits of friction to try and stop this type of fraud. So, yeah, I think it's an interesting topic, and really and truly, I'm not too sure what firms can be doing to reduce this without making it easier for fraudsters to have an impact on the businesses.
Yeah, I think you're right. I think if you're a retailer and you think, do I want to enable more seamless transactions but put my customers at a greater risk, or potentially annoy the customer a little bit, but at the end of the day you can say I'm doing it to protect you. I think the no-brainer decision there is to go for the latter, really. And when you were saying there about, you've experienced false declines, and it's like, yeah, no, so have I, and that, but when have we ever gone to complain about it online? I mean, that is very true. It does seem a little bit extreme. Like when I first read it, I was like, yeah, that makes sense. I've been annoyed at stuff before and gone online to have a look to see if other people are annoyed as well. And then I'm like, actually, how many times have I gone and written about a false decline and been like, this company, never go there again? It's like, no, you're right. You just say, well, let me try again, and then if it doesn't work, you might even go to your bank and cancel that transaction, but you're not going to completely sort of stop going to the retailer. At least I haven't before. Polly, what about you? Are you in the same sort of mindset, or do you think that, you would voice some anger online if they didn't take your money?
I mean, you know me. I'm always on the social media blasting brands that annoy me. No, this is a very interesting thing, and I'm really glad you brought it up today because I feel like this has shed light on something that I didn't really think was a thing. Because I know people complain on social media a lot. Like you see it on TikTok, you see it on Instagram. You know what I mean? Like it's content. Everyone loves a little complain and stuff like that. But to complain because your card has been declined seems really interesting to me because like you guys, my card has been declined sometimes or a payment has been declined sometimes, and then my thought is just, oh, okay, must be an issue, let's try again, and then sort of end of thought. I've never thought, oh, this is ridiculous, how could this happen, blah blah blah. Like that's never been something that's crossed my mind, so I find this really interesting that it's such a big issue. And obviously I can kind of see why, if you take away the sort of social media complaining for a minute, I can kind of see why there's some issues there because obviously, we want to make sure we're keeping customers and consumers happy. We want to make sure that, they are getting a seamless as journey as possible to make that final payment. But at the end of the day, like you guys were saying, it comes down to fraud, right? And it's always that delicate balance between customer satisfaction and preventing fraud. And between the two things, I would much rather prevent fraud. So if I have to put my card details in twice or three times because of a false decline, personally, I'm not going to be mad about that because I'd rather they did that if something looked a bit fishy. Because then next time, if something looks a bit fishy and it is a bit fishy, then I maybe won't have the protection that I did. So I can see why this is an issue, and I'm quite shocked at the amount of revenue that this could impact to the $25,000 number. I thought that was a significant amount of money. But at the end of the day, I think we've got to protect consumers as best that we can, and we've got to protect against fraud as best as we can. And if that means doing a couple of decline cards here, there, and everywhere, just because something looked odd, and I think what you've got to remember is they don't just decline cards or payments willy-nilly. Like there's going to be something about the transaction that sparked up a red flag for whatever that may be. So yeah, it's a really interesting one, and I've never actually seen anyone complain online about card declining or false declines. I've seen a lot of complaints about a lot of other things, but never about false declining. So yeah, I think this is a really interesting concept and one that I'd not really thought of a lot before. But how mad?
I think what's also really interesting is that it is the generations that are doing it. So it's still 22% of baby boomers and then 41% of Gen Zers. And I mean, Gen Z, who are always associated with being the most digitally native and the ones who are most on social media, it does almost go to show that it perhaps is just, a bit of a niche. I don't want to say, it just depends on the person, I guess, really, because it isn't really a generational thing. It doesn't seem that one generation is going to be more inclined to complain online than the other, but it's just, I think it really comes down to the person. And some people might be really upset that they can't get their, I don't know, their Mackies or something. But anyways, we'll move on to the next topic. Polly, why don't we go to you next?
Sure, let's do it. So my article today is all about digital banks and how they are continuing to capture users as Android banking app downloads are increased by 13% in 2023. So essentially, this little piece is about some new research from AppRadar and Split Metrics, who have found that Google Play Store downloads for digital banking apps have increased significantly and had the biggest user gains in 2023. An example it gives is Tandem Bank, which is a green UK-based digital bank, which saw new app downloads increase by 110% in 2023 compared to 2022, with Revolut, First Direct, Santander Spain, and Monzo following. And obviously, I thought this was really interesting because we've talked a lot recently about kind of digital first and the digital finance world, and as well as kind of like incumbent banks versus challenger banks and that sort of thing. And obviously, a challenger bank is more likely to be a bit more digitally savvy when it comes to their offerings. So like normally going to have a slightly better app experience, just sort of on average. So I thought this was a really interesting thing to see. But just like even in general, because obviously with this research, app downloads for sort of more incumbent banks are also increasing. So like NatWest has experienced some really great growth, RBS, Halifax, HSBC. So these apps are being downloaded, banking apps are being downloaded. And I wonder if that just means that we've kind of turned the tide a little bit in terms of now really focusing on a digital revolution, even though obviously it's something that's been cooking away for the past, several years now, this push to digital, this move to digital. But obviously it's great news for the finance community that these apps are being downloaded and there's an increase in customer year on year on year. And I wonder, I guess, if that has maybe something to do with the general age of consumers, like we were just saying about, Gen Z and boomers and things like that, because obviously Gen Z and younger tend to be the more digitally savvy, and as they're like growing up and becoming of an age where they need to have a better look at their finances, they're looking forward to like a digital world. I don't know, but I just thought it was a really interesting one to talk about. So I mean, I'd love to get a thought from you guys in terms of, do you think that this is just a general sort of push with digital and a general uptake of digital financing as a whole? Or do you think that this is where fintechs and neobanks and challengers are really coming into their own and starting to sort of put the acceleration on their own plans and kind of hopefully try and start taking over from some of the incumbent banks? But I mean, Tom, what do you think about this?
Yeah, I know we're always talking about digital banks sort of sitting at the forefront of innovation, but one thing we've always often come back to is the fact that incumbent banks seem to keep the majority of their customer base loyal to them. And I think it's interesting that sort of all, both incumbent banks and digital banks, they're seeing an uptake in downloads on these app stores, which shows that just a greater number of people overall are sort of embracing digital banking, and they're more happy now, especially as physical bank branches reduce. Some people are just being forced to, adopt these new technologies. And I just think that the findings of this were important because it just showed that, Revolut is the sort of main winner in this, but it really was a mix of, incumbent banks. You have to see Santander, uh, in there, slowly followed by Monzo. I think there's just a real mix. So it shows that people overall are embracing digital banking. But it is interesting to see that the sort of front runner in that is Revolut, which, like you said, shows that the tide might be changing. And this might be the sort of one of the first times we're seeing the digital banks actually garner a greater number of users than the incumbent banks. So I think it's a really interesting idea. I think one thing that I think is a key driver is just the sort of rewards that you get for joining the likes of Revolut. They're doing a really good job in sort of bringing people over with different offerings if you join them, better interest rates, cash rewards if you open accounts with them, different rewards where, airlines and things like that. I think it's just they're doing well to garner a bigger sort of customer base by utilizing the innovation that they have been sitting at, and I think they're now doing a good job of that. Whereas maybe before, people didn't necessarily, if there weren't rewards involved, wouldn't necessarily be as bothered about them. So I think it's a good idea. It gives us a good idea of what digital banks are doing really well, and I think there's a strong case here that if this trend continues, it'll be digital banks that will be taken to the forefront of banking overall.
Yeah, I think you're absolutely right, and I love everything that you've said there. And I think it's just a really interesting, uh, I guess, an interesting thing to see it all black and white in front of you. Like, obviously, we talk about digital a lot. Digital has been just a general topic within fintech for a very long time, but to actually kind of see evidence of that in like how many downloads have increased in percentages, I think is really great. And I think we're really moving towards seeing maybe a bit of a change in terms of this, incumbent versus challenger bank race that we kind of always talk about. But I mean, Francis, what do you think about this? Is this something that's changing things forever, or is it just a digital first push anyway?
I think it's more of a digital first push anyway. I think what Tom was saying is really true in that it is people are much more confident now digitally than they probably ever have been. And I thought it was really interesting, sort of the way that it said these are how many new users or new digital banking app users neobanks and incumbents are having, and then it also said this is how much growth there's been. Because I think when you look at Lloyd's, for example, compare Lloyd's to Revolut. Revolut had a 46% increase in its user in sort of app downloads, whereas Lloyd's only had 12% more downloads in 2023. But nonetheless, Lloyd's still had 1.3 million or in total its user base. And I think when you look at it like that, it does still show that perhaps it's some incumbents perhaps are already have had a lot of digital users in the past, and that this isn't so much a push now because they've already had it. I don't know. There is that sort of element to it, which I found quite interesting as well. And I think really, like again, like Tom was saying, is that it's going to be very difficult for challengers to really steal consumers from traditional banks because people are loyal to what they know, and if they're confident with it, then they're not really going to want to change. But nonetheless, I do think it is really interesting to sort of see that perhaps as more people grow in confidence online, they're going to say, actually, I don't even need anything that has uh, a branch at all. Yeah, the branch might be ages away, but that isn't what banking is anymore. And I think once banking sort of takes that sort of different appearance, which isn't that you have to go to a physical place, it's all online, and your money is all there. I think that will be an interesting time for challenges specifically.
Yeah, I think you're absolutely right. And I think you've raised some really interesting points there. And I guess it's just one of those things that I think is just going to always be ticking away in the background because of just the nature of fintech and neobanks and kind of where we are in the industry. And it's something that's been building, obviously, for the past several years now. And it'll be interesting to see where it goes in the future. But anyway, let's move on to Tom. Why don't you do your article?
Absolutely. So earlier this week, the customer engagement platform Twilio released a new research report which is focused on how firms are using customer data to deliver AI powered experiences. And while doing this research, it found a pretty serious disconnect between brands and their customers on transparency of the use of customer data. So basically, although 93% of UK brands say that they are transparent with customers about how AI uses their data, only 40% of customers agree, which basically means that more than half of customers don't feel as though they understand to a good enough degree how businesses are using their data. Twilio also found that 64% of UK consumers think protecting their data is a top way for brands to earn their trust, while 49% globally said that they would trust a brand more if it disclosed how customer data is used in its AI powered interactions. And just to sort of highlight the disparity between what businesses think is going on and what customers think is going on, that 27% of UK businesses believe they provide good or excellent customer engagement, but only 9% agree of UK consumers agree, which just highlights this gap. There's a huge difference in what UK businesses think is satisfactory and what consumers do. Now, so as we all know, consumers, including us, we all expect personalized experiences, and the only way for firms to actually deliver these is to utilize as much of our data basically as they can, because the more data they have on us, the more personalized these experiences can be. But with so many people also wary of how their data is used and which part of their data is accessed, it creates a really difficult balancing act for firms. People want maximum personalized experiences, but they also don't really want to give much data away. And that makes it a difficult place for businesses because they don't know how much data they can use. And even if they are transparent about how they use it, it isn't necessarily something that consumers are always interested in until they're asked, what do you know about this, about how firms are using your data? So I thought it was just a really interesting story, just seeing how there are customer expectations for their experiences, and yet they also have expectations that almost are the opposite of that when it comes to how they expect their data to be used. So, Polly, if you don't mind, I'll come to you first. What do you think about this disconnect between brands and their customers? And do you have any thoughts on what we can do to try and keep all parties happy in this sort of situation?
It's a really interesting thought. It's something that I think we touched on quite a lot in France's article the first time. It's this idea of the balancing act between security and customer experience. And I think it's really difficult to get that down, as we were saying, obviously, before with the false declines. It's so hard to find that fine line of balancing the two. And, having consumer trust is so important. And it's something that you really can't underestimate. And especially when you hear, just being a general person, in life, you hear so much, like so many horror stories on the news, on social media, of like fraud and people's data being sold, being misused, things like that. And so you want to be able to know you you trust the businesses that you are, using. And I think when it comes to AI, it's really interesting because obviously, a lot of companies already use AI in a lot of different ways, but now AI has really become in the forefront of just like the general world over the last year or so, especially with things like ChatGPT and all that. AI has become something that consumers just know about now. And I think there's a lot of apprehension when it comes to AI and how it works, because I don't think people quite understand how it works, just as a sort of a general layperson. Which I think is a very generalized statement, but I think it's very true. And I think when it comes to how brands use AI, I think it just makes sense for them to disclose how they utilize it and how their data is being used by AI, because the more you understand, the better you feel about consumer trust. And I think obviously when it comes to having personalized experiences, that again is also so important. But I think customers want to know how those personalized experiences are happening. And I think it's just a really interesting situation to be in. And it's something that I'm sure a lot of companies and a lot of brands, businesses, or whatever you want to call them, are really struggling in terms of how to balance that. And I think it's something that's going to continue to be a bit of a struggle. But this disconnect between brands and their consumers is so important. And I think at the end of the day, it's all about transparency, right? And it's all about being transparent to your consumers, to your clients, and telling them exactly how it is, exactly what you're doing. And I think that is going to win you the trust, and that is going to win you the loyalty, which again is the most important thing. So yeah, it's a really difficult challenge, and I don't envy any of the businesses that are trying to go through it, because I can't even imagine where you start with a lot of these things. But it's all about that balancing act again, and that is just going to be the key. And I think that is going to be the key to moving forward in this year, in the next year, however many years, with your business. That balancing act between security and consumer happiness is key. And I think how you do that is through trust and transparency. I don't really see another way.
Yeah, and I think sort of drawing another parallel with France's article earlier on, there is definitely that sort of balance act, like you said, that they have to keep in mind. But I do wonder if there's almost this idea of, when you ask people like, oh, are you concerned about how your data is being used? They are. But is that actually, in many cases, stopping them from interacting with these brands? And I feel like in most cases it probably wouldn't. At least, definitely for me, I feel like if I'm getting a personalized experience that I'm not getting anywhere else, and they really do get that experience bang on, and it's going to make me far more likely to return because I'm getting such a great service from whatever business or company that I'm dealing with. And I think at the end of the day, it's common sense that the better the sort of personalized experience is, the more of your data that they are utilizing. So I think for me, I would expect to sort of have to give up more data in order to get this best experience. And if I'm really finding a personalized experience that I love, I'm not likely to say, oh, I'm not going to use that anymore. And I'll use something that is basically less helpful or does a worse job for me because they're using less of my data. I don't think that's a trade off that I'd be willing to engage in. So I wonder if, there is concern there, but if it's actually big enough to stop people from sort of going to these firms that are using this data, regardless of how transparent they're being or not. But, Francis, what do you think? Do you think firms should be doing more to appease their customers or, trying to reduce this gap?
I think it's almost a bit of a catch-22, really, isn't it? Because you want personalized experiences, but you can't do that without data or like giving up data. But then you don't want to give up data because you don't want them to have it. But then, you find yourself sort of stuck in between a rock and a hard place. I think for me, I think what really stood out in this article, though, was just how few businesses really think that they're already providing good or excellent customer engagement. Because when you sort of look at it from a bigger picture, only really there's 1 in 4 basically said that, yeah, I'm doing well and I'm standing by my customers right now. So it's not really any surprise that even fewer customers think they're receiving a good experience. If 3 out of the 4 businesses that they might be going to are sort of aware that they're not doing a good job and sort of aren't really doing anything to make that customer engagement better, they're not sort of looking to find a way. Because I think, yeah, you have to sort of say that, you know, or as a consumer, you might be concerned how your data is being used. But at least if you can sort of get an idea from the business as to, that it is all moral and it's not being sort of used badly, I think that you can say, fine, you can use it, but I know that you're not using it in or getting it in a bad way. A business sort of admitting that they're not doing a good or excellent job in terms of customer engagement, I think that already sort of sends sort of alarm bells ringing, and it makes you think, oh, if you know that you're not doing a good job and you're not looking to make that better, that to me is a big standout sort of red flag. I think it's difficult, really, because I think it's like you said, if you're getting an experience which is really, really sort of top notch and you think this is fantastic, then you're going to sort of say, then yeah, you can use the data, and so long as it is being used in an ethical way, really, I think is the big thing. Because at the end of the day, there's not really anywhere that you can sort of get a good experience without giving that up. So it's tricky. I think there is, not to sort of just rehash what both of you have already said, but it is a fine line, and that organizations really just need to be transparent, I think, with their consumers, and just really ensure that they're not getting lazy with it either. I think that is a big thing, is that they continue to try and sort of improve customer engagement as time goes on, with new sort of listening to what they want. If customers want to know how their data is being used, don't give the entire game away, but appease the customers a little bit, give them something to work with. And I think in doing so, in doing that, even then, everyone's really a winner. Customers feel more secure, they feel confident to spend with the retailers, and the retailers are getting more revenue in. So at the end of the day, I think it's a win-win if that happens.
Yeah, I definitely agree with that. There's sort of stuff to gain for all parties involved. And the only thing I think is that maybe asking businesses to be completely transparent might be a little bit ambitious, to be fair, but we'll see how the space evolves. And
you probably don't even want to know, to be fair. Full transparency.
Yeah.
At that point, you're probably like, I don't want to know.
Yeah, it's probably best. Sometimes it's best to not know what's going on and be just completely unaware. Although that's probably not the message we should be sending out to the listeners, but hopefully we've given you something to think about there. And with that in mind, why don't we go to our last segment?
Absolutely. Thank you very much. Obviously, if you want to hear any more about the articles we talked about today or anything else from the fintech world, head on over to fintechtimes.com, where there's plenty more news and insights over there. But as Tom said, let's do our what I learned this week. So each week we learn so much new information. Being on the Fintech Times editorial team, so much stuff across our desks that we thought it'd be fun to share that with our listeners. So Tom, what have you learned this week?
This week, I learned that as much as 75% of financial institutions are actually struggling to utilize new payment offerings and stronger cybersecurity due to their continuing reliance on legacy core systems, which was revealed in a new report by Endava.
Amazing stuff. And Francis, what have you learned this week?
So this week I learned that despite what everyone seems to have been saying, because we've been to quite a few events this year, And the general consensus has been that 2024 is going to be a great year for fintech funding. Well, it turns out that that might just be a little bit of a pipe dream and just not really that attainable, because some research has been published that found that Q1 of 2024 has been the worst performing quarter since Q1 of 20 in terms of fintech funding. So, yeah, hopefully the next 3 quarters are slightly better.
I mean, that isn't bringing the party for this episode, is it? That's just that's quite sad, bad news. What I learned this week is that The Herd, the Women in Fintech spokesperson Intex, is hosting a free media training program for women and non-binary people working in fintech and financial services. And I just thought that was really nice and something that we should be sharing about more. But anyway, guys, thank you so much for joining me. 150 episodes, done and dusted. Who'd have thought? Who'd have thought we'd be here today? And yet here we are. So as ever, obviously, thank you guys for joining me. Thank you for bringing some great chat. And then, yeah, let's make the next 150 episodes just as good, if not even better. So, no, I will catch you guys on the next one.
See you guys next week. I'm ready for 151.
Onwards and upwards. Here's to the next 150. See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using hashtag TFT News and Views and follow us at the Fintech Times.